Gold versus Bitcoin. Which is the better inflation hedge? Your money is losing value right now, and I'm about to show you which asset actually protects it. Gold or Bitcoin? One of them is about to shock you. Inflation hit 4% last year. Your savings account? Getting destroyed. Most people throw money into their 401k and hope for the best, but what if I told you there's a smarter way to hedge against inflation? I'm breaking down gold versus Bitcoin today. By the end of this video, you'll know exactly which one belongs in your portfolio. And spoiler alert, the answer might not be what you think. Gold has protected wealth for literally 5,000 years. Let me give you real numbers. In 2000, gold was $280 per ounce. Today it's over $2,000 per ounce. That's a 700% return. Over 2 decades. Not bad, right? But here's what matters. Inflation over that same period was about 56%, meaning gold crushed inflation. Your money in a savings account? It would have lost purchasing power. But gold? It kept getting stronger. Gold works because it's physical. You can hold it. That matters psychologically. When the economy gets shaky, people panic, buy gold. Demand goes up. Price goes up. It's been the ultimate safety blanket for governments, billionaires, and everyday people. Right now, you can buy gold 3 ways. Physical gold at a coin shop or online dealer. Gold ETFs like GLD on Robinhood or Fidelity. Or mining stocks if you want leverage. The downside? Gold doesn't pay dividends. It doesn't produce cash flow. You're betting purely on price appreciation. And from 2012 to 2020, gold sat flat. People who bought it hoped for inflation that never came. They got bored and sold. Meanwhile, the S&P 500 was crushing it. Bitcoin is only 15 years old, but it's already the most volatile asset most people have never owned. In 2017, Bitcoin went from $500 to $20,000. Then it crashed to $3,000. That's the kind of roller coaster that makes people either rich or broke. But zoom out. In 2010, Bitcoin was 1 cent. Today it's over $40,000. That's a 40 million x return. Here's why Bitcoin matters as an inflation hedge. It's capped at 21 million coins. Ever. No government can print more. No central bank can dilute it. In a world where the Federal Reserve can create money out of thin air, Bitcoin is the ultimate scarcity play. From 2020 to 2021, the Fed printed more money than it had in the previous 200 years. Bitcoin went from $10,000 to $69,000. Coincidence? Maybe. But a lot of smart money saw it coming and positioned early. The catch? Bitcoin is still figuring out what it wants to be. Is it digital gold? A currency? A speculative asset? Nobody really knows yet. That uncertainty creates volatility. If you bought Bitcoin at $60,000 in late 2021, you were down 70% 6 months later. That psychological pain is real. You need conviction. You need a stomach for swings. But you also need to understand. Bitcoin has recovered from every crash. Every single one. Stronger than before. Gold is steady. Bitcoin is wild. Gold has a 100-year track record. Bitcoin has 15 years. Gold pays nothing. Bitcoin costs nothing to hold. Here's the real answer. They serve different purposes. Gold is for stability. If you're 45 years old with a Roth IRA and a 401k, and you want to sleep at night knowing your inflation hedge isn't going to crater tomorrow, gold is your play. 5 to 10% of your portfolio. Done. Bitcoin is for asymmetric upside. If you're under 35, you have a high risk tolerance, and you believe in digital currency long term, Bitcoin deserves 1 to 5%. Not more. That money has to be money you can afford to lose. The best move? Own both. Gold handles the downside. Bitcoin handles the upside. Together. They hedge different kinds of inflation scenarios. Right now, I'd lean Bitcoin for the next 3 to 5 years because inflation is still sticky. The Fed isn't cutting rates fast enough. That's a tailwind for alternative assets. But I wouldn't bet the farm on it. If this breakdown helped you think about inflation differently, smash that subscribe button. I break down investment decisions like this every week. Real numbers, real strategy, no BS. Drop a comment. Are you Team Gold or Team Bitcoin? I read every single one. And if you're just starting to think about hedging inflation, start with the boring stuff first. Max your 401k. Open a Roth IRA. Buy low-cost index funds. Those are your foundation. Then, once you've got the basics locked in, this conversation matters. Thanks for watching.